on a service provider to make it clearer to the consumer. And I think this effort and efforts like these take us closer to our destination. Regulatory changes are all focused on we meet the regulators. The amount of scrutiny, many of you may think that this is all this is all talk and people say various things which we are doing something but kuch hota to hai nahi and stuff like that, and insurers are just cheating customers. We hear complaints and stuff like that. But I must tell you, and I'll be very honest with all of you, the amount of scrutiny and the amount of the number of answers that we have to give, and I personally have to give sometimes to the regulator, it's not easy. It's not easy. There is self-regulation that you have to impose on yourself, and there is somebody who is really watching you deeply. Will you believe? Many of you may not know. We got a letter from the insurer. There was an instruction from Prime Minister's office that CEO of every insurance company, Mr. Sant Kumar would know it. The CEO of every insurance company every week has to personally address 20 grievances that your company is getting. Right? And the first week of the next month, you have to send a report to IRDA on what you did on the 80 grievances that you provided. So every week, I did it yesterday. Every week, I sit with my team, take out 20 grievances, and we go through it. Right? It just takes you closer to the entire situation. Right? It forces you to think, because we don't, as human beings, nobody wants to cheat anybody. It just happens sometimes. Some people mislead some people and they bring a bad name to the industry. But such is the level of governance that's being imposed both internally as well from outside in from the regulator. And lastly, why will it grow? It will grow because I think one of the things which is making cycle time shorter, one of the things which is taking things closer to the consumer, which is making consumers extremely aware, much more so in tier 2 and tier 3 cities than already had happened in the tier 1 cities, is this entire digital economy. The largest smartphone market in the world, right? When I look at, even today, I don't know whether you would know the statistics or not. Even today, 80% of every insurance sale that happens, 80% of every insurance sale, customer actually search for the product or the solution online, and they go and buy offline from an agent or a bank or whatever, because everybody knows that information is available online. And everybody can see, you can see views, you can see products, you can purchase products, etc. And digital economy will double or triple the rates of growth in our industry. I think there are 5 things which will define, which will change. People who win in this industry, and 5 key items for the way forward. I think the first one is to my mind, is simplicity, right? Just doing things making it extremely simple for consumers to understand products. The mandate that at least I give to my team, the product team, is that when I am, if I'm making a policy document, if I'm making a product, if my daughter, who's 14 years old, going to 15, if she can't understand it, it's not going to the market, right? So it has to be made that simple thing. Read it, understand it. It should be written in some very, very simple language, right? And we have this, we have this habit of making simple things very complex, and we use terminologies which we understand very deeply. But the other day I was sitting in the room, and there was some foreclosure of policies happening, right? Some customer has taken a policy, and you have to foreclose the policy because he's not paid to me on his lab, etc. And you have to give the money back to the customer. So you write a letter saying your policy will be foreclosed. Nobody understands foreclosure. Right? People in the room who were sitting there, I asked somebody sitting in the room, some new management trainee, we hired from some good management college, do you understand the meaning of foreclosure? No. So, but how do we expect the consumer to know the meaning of foreclosure? Right? So it has to be broken down into simple stuff for a consumer, and I think that's something at least I am very passionate about, and we're trying to change it, and I can see these changes happening across the industry, making it extremely simple. You go to the regulator, you meet Mr. Vijayan, and whenever I sit with him, he's only asking, He's saying, boss, बहुत simple चाहिए, over the counter बेचना है. And for us, it's extremely important for us as a company because we are a Big Bazaar company, right? Big Bazaar is the owner, Future is owner of Big Bazaar, and Future is the majority shareholder even in Future generally. So it just resonates very well with us. How do you make it very simple for the consumer? Because in a store setting, in a Big Bazaar store, if you want to sell a policy, how do you explain it to the consumer in less than 1 minute? Right? And if you're able to do that, and regulator is extremely passionate about it, Mr. Vijayan himself, you can talk about a whole lot of other stuff. Meeting is over in 10 minutes. To start talking with him for simplicity, meeting will last for 2 hours, because he's just extremely passionate about it. And I think they have brought new guidelines about this now on the over-the-counter products, over-the-counter salespersons, where some products can be packaged and sold very simply to a consumer. And unless we make it simple, and unless the consumer can see real benefit out of that simplicity, the penetration that we talked about won't happen, right? I think, and that's the need of the hour for the country. I think that's simple products, simple processes, etc. is extremely important. Second thing I think is the consumer. I think just focus on the consumer very, very deeply. For my 25 years of financial services industry, I have always wondered as to how do you bring the consumer into the boardroom, right? And say, he's the guy. Everybody says it. I also say it. I've said it for 25 years. Saying, consumer is very important. He should be in the boardroom. Consumer aapse chalta hai hamara company. Mera tankha wahan se aata hai, and all that stuff we keep saying. But it doesn't get embedded into the values of the company. Now, with the advent of technology, you can actually put the consumer in the boardroom. And I'm very happy to share that, and at least I have put my consumer in the boardroom, because it's extremely important for a company like us, which is young, to kind of break out and to do things differently. So we have on my phone, on my cell phone, it's in the charts. On my cell phone, I have an app. Okay, if a customer is giving me feedback, okay, that app, the feedback flows real time into my phone. Okay, if he's not happy, it flows real time into the phones of many people in the company. He says, I'm not happy. It appears on my screen as a red mark. Now I look at it, I don't do much about it. I speak to about 5 such consumers in a week, right? And it also lands on phones of these people. They go and speak to customers and resolve their issues. At the back end, we keep making process changes so that kind of on a real-time basis, customer's voice is heard by the company, right? And I think it's extremely important to do that. And there are many companies who are changing or breaking, the entire thing. So service has to be at the core, because life insurance as well as general insurance, you don't know when it's going to hit you, the claim, or when whatever, and you're saving really for the long term. So you need to build that customer trust, and comes with mistakes happen by companies and etc. But as long as you're able to change it, make it fast, etc., it kind of takes you forward. Technology, and Kailash talked about analytics. Big things happening there. Big things happening. You can't even imagine what are the kind of things that a company can do today basis technology and analytics. I think technology has to be embraced. Life insurance adoption of technology is a bit dated than, let's say, a bank or many other companies in financial services. But today that's changing very fast, and companies which change technology, I think you will have to embrace new methods of doing things, and that will also take costs out of your operating model. Now, if the costs go out of your operating model, the only person who benefits in the entire thing, to my mind, is the consumer. Because you have 100 rupees of income, you have 180 rupees of expense, you have 20 rupees of profit. You bring this 80 down to 70, this 10 will get shared with the consumer, and consumer returns will become better. And that's another item that we are having discussions with the regulator, and they are driving it very, very deeply. Mr. Vijayans will and people member life. We'll ask, why can't you give 6% return to a consumer? And you go back and start thinking, the only impediment to getting there is your cost, right? So because you earn some income, there's a cost. So as long as you keep bringing costs down, the companies will move forward. Fourth is, I think, new ways of distribution, new forms of distribution, digital, IMF, improvised agency, and this opening of bank insurance architecture. bank insurance, open architecture in bank insurance, where one bank can tie with two insurers now. We're seeing changes there, and I think it's moving very fast. All of these are pointing towards growth in the industry. For us, it's important because we are trying to. One thing which is often not talked about in many of these forums, and I kind of wonder why. It's talked about, but not with the same passion as we talk about a product or a consumer or misselling or complaints, etc. Is the people in the industry. I think it's extremely important and imperative to get the right kind of talent in this industry, right? And I think with technology changing, with a lot of stuff changing, it's the biggest industry in the world, and it is in terms of the amount of money which is at stake in an economy. It's the single largest provider of long-term funds to an economy, right? It has to attract the right kind of talent, and I think that's something insurance companies and the entire environment has to focus on, and I think that infrastructure has to kind of grow for the companies to grow. And lastly, to my mind, is market conduct. And as we were talking about in the morning, structural changes will happen, and we can see some of those structural changes happening in the industry, which will change the industry. Now, so things like and we talked about credit bureau coming in banking industry on the lending side. Today, every consumer is conscious about his credit bureau score, because he knows if credit bureau score is bad, he can't get a loan from a bank. Likewise, in industry, there are bureaus being set up, there are data repositories being set up, okay, which will keep fraud away from the companies, which will ensure that the real-time information about consumer, it help us make decisions better, and stuff like that will happen, and at that time, I think will change the industry quite sharply. All in all, I think I'm personally very bullish about the industry. While of course it's kind of guarded optimism. It has to show. It has to we have to see how all the changes keep bringing more and more benefits to us. But I think I'm very happy, and I'm very happy that Bengal Chamber of Commerce is organizing events like this to express our thoughts, and you guys are, I'm sure, industry participants. When you go out, if you carry these messages, that whatever you hear here to the rest of the people who are not here, I think that will be just awesome. On that note, thank you very much, and thanks for your patient hearing.
Thank you, Manishi, for optimism in the industry. Now I would request our chief guest, Mr. K. Sanat Kumar, Chairman of National Insurance Company Limited, to kindly deliver the announcement.
Mr. Sudhanu Ghosh, President Designate of Bengal Chamber of Commerce, Mr. Subodhit Ghosh, Director General Designate of the Chamber, my colleagues on the dais, Kailash and Manish from insurance industry and actuarial practice and consultancy, very much in the industry, delegates to this fourth insurance seminar held by Bengal Chamber of Commerce, delegates from basically from the insurance and financial industry sector, members of the media. Let me on the outset, I thank you very much. It's a great honor for me to be here representing my company in this August forum. Bengal Chamber of Commerce has been a national insurance company. We have a very long traditional kind of relationship, mutually beneficial of course, and it's always our pleasure to participate in this kind of seminars organized by Chamber of Commerce at every point of time. It's a very interesting topic, insurance industry, the road ahead. Obviously, that's obviously challenging. And this particular morning session, I'm informed it is about the challenges and stories of untapped potential. Now, I will just, I've been listening to my previous speakers. They have brought in to the attention of the delegates some very critical factors that is posing a challenges to the insurance industry as we grow. And I would like to put my perspective from the non-life side, the general insurance side. In India, unlike in some of the other countries, most of the countries in the world, there is a China wall between the practice of non-life and life. those insurance companies which have non-life cannot do life and vice versa. There are some companies, countries in the world where an insurance company can do both. I mean, India is a different country where life and non-life as separate companies have to be established. For example, Future Generali has a company in the life side, they have a company on the non-life side as well. Two different, and Bajaj also has that kind of operation. See, in non-life, one of the points that is raised against non-life, I mean, you have been there, and it is industry has been opened in year 2000. Today we have about 25 non-life insurance companies here operating and vying in the market for a market share and business, out of which about 4 are government, completely owned by Government of India. And one is again an agricultural insurance company which is sponsored by these 4 companies. Then you have a specialty insurance company called Export Credit and Guarantee Corporation, which again works in a niche market. And there are other insurance companies, with most of them with some kind of FDI of global. You name the largest non-life insurance companies in the world, they are present in India in one form or other. So that is the market, and market last year, as in 2015-16, we fell slightly short of gross premium collection of 1 lakh crore. It was something around 96,000 crores. When the year was beginning, all of us thought we would cross 1 lakh crore, but we didn't. Due to various reasons, we just fell short by about 4,000, 5,000 crores. The point is, I'd like to make as challenge number 1 is the penetration. You see, the penetration of the non-life sector in India is measured by a formula called total premium divided by the GDP. So that is now about 0.80%. I have not known the exact figures as on 31st March 2016, but it must be 0.81 or 0.82 or 0.79, something in that range. This is a weakness as the analyst and the market observers point out. You see the other countries, take Taiwan, take China, take Brazil, take Indonesia, take Malaysia, take Korea, they are all at 2.5%, 2.5%, 3%, and you are only at 0.80%, and this is an inadequacy of the market and the industry. Obviously it is so, it looks like that. But then when we drill a little deeper into it, I mean, we did do that, but then we find out some kind of interesting situations. See, the countries which we are compared against, countries like China, Indonesia, Taiwan, the GDP consists of mainly of manufacturing segment. In India, 60% of your GDP is service sector. Probably, I mean, I may not be correct, but probably the service sector do not generate that kind of insurable assets as much as the manufacturing segment generates. Possibly it could be one of the reasons that why we are struggling, because 8.80 or 0.79 seems to be a jinx. Way back when the non-life insurance industry was 10,000 crores, it was 0.670. When the non-life industry became 40,000 crore, it became 0.870. When it became 18,000 crore, again it was 0.75%. When it became 96,000, still we are at 0.8. This seems to be a jinx figure. We are not able to break away into 2-3%, which they say the potential is there. There is no dearth of insurance companies, there is no dearth of product, there is no dearth of distribution. We have 25 companies with high-end technologies and high decibel advertisements and high decibel information in the market. So where is the issue here? Possibly could be the predominance of the service sector in the country. There is another one which now we are thinking about. Is it because the general insurance industry is not accepted by the customer as a thing that they should go in? Now, out of this, we have done some kind of, because there is no exact data available, we assume out of the 1.3 billion population, we are covering around 40 crores of population of has been touched by some kind of general insurance policy or other. That is the general kind of impression, 40 crores. This 40 crores itself is substantial because it is more than the population of many countries. To that extent, we say that 40 crores is an impressive figure for covering 40 crore people by some kind of non-life policy. It's a very impressive performance if you start taking it standalone. But compared to the 1.3 billion, you say you have a huge potential. Now, here comes the problem. Why are we not able to spread rapidly? For example, let us take the case of Jammu and Kashmir earthquake or Uttarakhand floods. It was devastating. See, the economic losses created by these calamities, like 25,000 crore, for a Chennai flood, it says it's caused an economic loss of 25,000 crore, but insured losses are only about 4,000 crore and then net revenue. So there is a huge gap. People have not been insured for years. Even in the developing country, it would have been as high as 60 to 70% of the total economic loss would have been met by the insurance industry. In Chennai, where it did not happen, in Uttarakhand, it did not happen, in JNK earthquake, it did not happen. Where is the problem? Is there a credibility barrier here? Does people think that insurance companies promise a lot of things? Their policies are very complex, but at the time of claim, that is called moment of truth, they pull out all the fine print and say, because of you did not do that and you did not do that, condition number 23, you will not get the claim, or if you get the claim, you get only a little bit of that. Is there an impression like that? Do people feel that it is a very complex kind of a situation? Is there an awareness gap? Is that really stopping us from exploding the penetration from 0.80 to higher percentage? Is there a distrust element among the population to insure? Otherwise, why? There were no long queues in front of insurance companies in Chennai after the flood to take a flood cover. There were none. Nobody came up. Except that we kept on pushing the product. The pull effect was not there. Everybody knew that there was a flood cover. There was flood cover is a very fire property cover for your house, residence, shops, establishments, a very cheap cover. People are taking cover to experience, which is mandatory as in terms of motor. Even in motor insurance, the data shows about 20% of the vehicle in India are not insured at all, despite the mandatory position. And also, bank loans, financing, they insure the products. And when hospital costs are doing high, there is a demand for health insurance. But what about a demand for householders insurance, a professional indemnity policy for the professionals, a shopkeeper's policy, my personal accident, my travel insurance? How many of us are insuring our laptops, our costly mobile phones? Are you covering any liability that might tree in my house, falls on our house, and that liability is covered? And a huge expansion, which is why there is no such kind of huge demand. Across the world, insurance product is a push. But then, in developing country, many of these people are saturated markets. The growth rate in these countries for non-life is hovering around 2 to 3% only. While in India, it has been continuously above 15% for the past 10-15 years. The industry has been growing at 10-15 years for 15%. Our GDP, which grows about 7.5 to 8%, whatever it is, still we say your penetration is not there, it's only 0.80%. This is a kind of a complexity which I think there will be deeper analysis into it. There should be customer surveys, there should be basic reasons to see why it is happening. I believe it's not an inadequacy of the insurance industry to provide products. There are a huge amount of products, there are about 250 non-life products floating around. Distribution channels, there are huge distribution channels, number of them, agents, brokers, in-house marketing, point of sale, insurance marketing firms, common service centers, online channel, there is web aggregators, there are policy bazaars and bank bazaars and all that. This enough amount of availability probably is not enough, possibly. Possibly you need to address the customer credibility barrier. Probably you need to come out with a kind of awareness campaign. Look here, it's easy to take an insurance and it is easier to get a claim. I keep on seeing the advertisement from the mutual fund industry saying how simple it is to take an SIP, how simple it is to go into an equity-linked kind of a mutual fund. How do you go for, should you have fixed income mutual fund, or you should go a flexible income, or it is a risk-based income. I keep on telling you in large what they call as advertorials and seminars and sessions. So this is the point in this kind of a seminar in which specialists are there. I think all of us should get together and think, are we creating some blocks in the mind of the customer that you are not possibly claim friendly? Policy friendly, yes, we have agents who will go and say, but at the time of claim, is there a feeling in the market that we possibly might not deliver to the value they are expecting? I mean, it's a serious thing which we need to express when you're talking about penetration and its growth. Second one is profitability. Another challenge of the Indian insurance industry from a non-life perspective, I'm saying, it's a profitability factor. As on 31/12/2015, when the last quarter results were published, the 31 results are yet coming out, companies are coming with us. Not a single non-life company made profit out of insurance. As on 30, I'm talking about 15th year of opening up of the market. Not a single non-life insurance company made business profits as on 31/12, which the published figures are available. They all made profit out of making investment out of the corpus. You know, the IRDA says you should have a policyholders fund and you should have a tech insurance shareholders funds, and we have these funds. And they say how long this one should be kept, in what way it should be invested, how should it be, what are the channels in which should be invested, should we invest and make money out of that? And not a single one. Is there no, where is the issue here? Obviously public sector companies have made more losses, but private sector companies also forward. It's almost interesting to note that standalone health insurance companies, there are 3 or 4 in the country, where the incurred loss ratios are lower, still they are making underwriting profits because the combined ratio is indicated is all of them are crossed 100%. Possibly as on 31st March, some of them would make some underwriting profits, but not much. So profitability is a major impediment, and if you do not make profit year after year, year after year, year after year, the capability and attitude of the insurance company to foray into untapped areas is diminishing. Continuous losses. Despite that, when the insurance company, the government of India said, okay, you can increase your FD up to 49, every foreign collaborator agreed that we will scale up our investment to 49% because the amount involved is paltry in terms of US dollars. And they are all sitting on huge funds outside there because there is no growth in service. And any amount of investment in a growth economic scenario is good enough. It's like Japan investing in India. Japan, there is no interest rate, real interest rate at all. So any investment or any fund holder in Japan is worthwhile for at least 2 to 3% interest in India. It makes sense. So that they are coming in. But then there is profitability. And is down the line, is there a light at the end of the tunnel? Many of the insurance practitioners do not see the light yet. There could be, I mean, there will be market contact, which my previous speaker was talking about. There could be market discipline, and there will be less competition, not aggressive discounting. Today, your property insurance, that is a prior property insurance included FIC, is discounted at 99%. I could never understand what would be a discount of 99% in the market. So this is the kind of competition that is happening, and in motor also the competitive discounts are excellent. Despite the competition, despite the non-profitable nature of the operations, the discounts are growing. A very, very complex situations which we are trying to grapple with, we are trying to fight it out, we are trying to increase the profitability. Only because the reinsurance market abroad has awash with capital, and they are not very much keen on increasing the price lines because they themselves have huge amount of capital lying waiting.